All right, hello, and welcome back to another video. So this is my portfolio update for the month of May. Certainly got back on the right trend, a much better month than April. We put in some reasonable gains this month, and the times have changed. Summer's here. I've got a hay fever in action, so apologise if I'm a bit sniffly during this video. I've just dosed up on a load of meds and nasal spray, so it should be okay. But yeah, summer's definitely here, which is very nice to see. Playing lots of golf, doing lots of running, and doing lots of stock research and trading. So it's all good times. Right, let's dive straight into the stats for the month of May, as I normally do. So for the month, these are the same screenshots I always pull off from Stockopedia. I put my account in there. I trade through AJ Bell, but it's all of this stuff I put through Stockopedia. So plus 4.57% for the month. So far better than last month, where we were down kind of like 3%. And that was a bit disheartening because the UK markets in particular were flying last month. But because my portfolio currently, it's not a strategy, I just follow where the trends are, is currently very weighted to US mega cap stocks. We had a bit of a disparity that month, and I was weak when the UK was very strong. This month we're back to being strong, even though the FTSE still put in a good almost 2%. The FTSE All Share is what I use as my benchmark. But we more than doubled it this month. We were up over 6%, and I thought we were going to be in for like a really, really good month if that trend had carried on. But we had a bit of a pullback in the last kind of few days of the month. But that's absolutely fine. 4.57% for the month. Very happy with. Back on track. Obviously, we're not going to, but if we could do that every month, then we'd be very, very, very happy. And what does that mean for the year to date? Well, we took a nosedive last month. We were doing very well, up at kind of 6% for the year, went all the way back, gave it all back basically last month and a half, down to zero, and kind of have been creeping our way back up. We are now at 5.28% for the year, which isn't stellar. I'm not really that happy with that, but I've been revising and tweaking my process through the whole of this stage, the whole of this year, and I mean that's how investing and trading goes, doesn't it? You'll have dips and troughs and peaks and everything. It's a bit of a roller coaster. So I'm just hoping that's the low of the year and we kind of continue steadily upwards from there. But I'm just going to keep following the process. I think the process works. We just, as I say, the mega cap US stocks had a big, gave a lot back in that period, and more than kind of 30-40% of my, probably even more than that, 40% of my portfolio was in those stocks. So we just took a big hit. The FTSE All Share is up 6.74% for the year, so we're a little bit off it, but I have every confidence we're going to catch back up with that. So that's year to date, and then this is the all-time for the portfolio, and this is from the beginning of 2022, so kind of January 2022. We are up 18.55%. Again, nothing terrible, but I know that I can do a lot better than that. There's been so much refinement in my strategy through this period. Back in all of this period here, I was very much a value investor. I still had a checklist system, but I was buying in downtrends, trying to, based on valuation and all of this kind of stuff, and I ended up getting myself into a lot of trouble. And now I am very much, I still use fundamentals to choose stocks to go on my watch list, but I buy based on momentum and charting, so more of a trading mentality, but using fundamentals to pick the stocks. So yeah, 18.55% for year to, and compared to the FTSE that's only put in 6.8, even though I'm not over the moon with this performance, we're still almost tripling the benchmark that I'm using. So that's quite good. And then this is just, I'm going to go through my buys and sells next that I've done in the month of May, but this is the portfolio as it stands. So all of these figures are completely accurate to what I have in my actual dealing account on AJ Bell, including like dealing fees, taxes, all of that kind of stuff. Every cost that there is associated with trading with your broker, I have included in here. So these are all 100% accurate as much as I can be. And I've ordered it in percentage gains. So what's very nice, I'm really liking how this is this is looking now. This is the first time, well, ever actually, that I've looked at my portfolio and there's not been a stock that's at more than 10% down. So I'm incredibly happy with that. It makes it far more pleasant to look at my portfolio and know that the worst position is minus 9%. And we've obviously got quite a few in kind of pushing up reasonable gains now. Meta's still the largest position. We took profits on that last month, but we're still at £4,500 profit, even though we took 4,000 last month. So very happy with that. Nvidia continues to do well, and you'll see some new ones in here, which I'm going to get onto now when I talk through my buys and sells. So we'll get straight onto that now. So before I get into my buys and sells, and I've been saying I'm doing it for ages, I am doing it because I'm going to roll straight into it now. I'll be wearing the same clothes in the video. My tweaked investing trading process. So I have some tweaks on my rules, some new, basically a whole new set of rules and a new checklist. As I say, straight after this, I'm rolling straight into filming that video, which is just a video dedicated to my investment, my trading process, all of the rules that go along with that from start to finish, so that everyone has an actual understanding of how my process works and what I'm doing. So I think that video will be posted. I'm not going to post them on the same day because I think there'll be a bit of overlap there and it'll probably hurt both videos, but I'll post it. I plan on posting this video today as I'm filming, so the 4th of Jan, and I will probably post that video later this week, Thursday, Friday or so. So I'll explain it as I'm going, but just be aware there's a dedicated video coming out, which I think will be quite a lengthy video on my entire investing process as it stands, and I see that staying the same for quite a while now. But anyway, it's similar to the process I've been using, still using the same entry techniques and things. So I'll come on to my buys for the month of May now. The first one is Arista Networks. So a US tech company, has some exposure to kind of chips and AI and that kind of sector. My yellow circle is the entry. So I was watching it. It's been in a really, really nice uptrend. Broke out of this base down here back ages ago, back in March of last year. So it's been in a year-long uptrend. And I've been watching it since about here, and I've just been waiting for an entry opportunity. It kind of came all the way down to the 150 here, so kind of started putting in a bit of a sideways action through this whole range here. It was kind of sideways. And I was just watching it from about here. I decided to put this line in and I was waiting for a breakout. Had some really decent earnings here. Let me pull up the earnings. Yeah, so this was my earnings snapshot for their results that came out just before I entered. So accelerating earnings per share. The revenue is the only the concern is declining, and it's been steadily declining. But no red on the kind of operational side of things. The highlights, there's nothing that kind of scared me on that kind of thing. They're growing revenue, the service revenue, everything is going well. They raised their guidance for the full year. So on the whole, pretty decent. And that was here. So obviously after that, the market liked the results and it was jumping up. I missed it this day, so it broke through on decent volume. So you can see at the bottom, these are the volume bars. This white line is the average for the last 50 days. So it's way above the average, and you can see up here, because my mouse is moving, it's changing, but the green number or the red number, depending on if it's higher or lower, is the volume of the day, and the white number is the average. So if I go to here, you can see on the day it broke out, it was 5.5 million volume compared to an average of 2.7 million. So my usual parameter is I'm looking for 1.5 times the average volume. And you can't always tell that on the day, but you can judge. So let's say on the day it was at the open, the market had just opened and it had been open for about an hour. You could put it on the 30-minute timeline or whatever you're looking for. Look at the start of the day and see how that volume compared to the average volume at that kind of day, just to get an idea. So this day, the start was much higher than usual. through the rest of the day it was about average and it finished. So you'd have a reasonable indication that an hour and a half into the day here that it was going to be a higher than usual volume day. This is for the downside, but it applies to the upside as well. So that's what I do if I'm looking to enter a stock at the open, if it's kind of after good earnings or something. And it's not always 100%. If you get to the end of the day and the volume doesn't come in, then you've done it without volume. And I've actually got rules for what I do in that situation, which I'll run through in my dedicated video. But effectively, it slightly changes the strategy, and I look to get out sooner than I would have done. But the volume is here. I didn't enter on that day. I can't remember why. It was a Friday. I might have been, and it would have been Friday afternoon, so I might have been off playing golf or something, or doing something on a Friday evening. But I got in the next day because it hadn't extended too far, so it was effectively as if I'd just got in that day. So I just entered there. And this, it's not the end of the world yet. So the stop was below here, so I'm not allowed to stop more than 10% below, and I try and get it, if it works, on some kind of sensible level. So I put this just below the 50-day moving average. It extended, it's pulled back. If it falls through, I sell, I'm out. I think the more likely scenario is it's come back down to the 150, and then it will continue its upwards journey. But if I get stopped out, I'm stopped out, and I've had a loss of 10% on that one. I should say this was just before. Well, actually, I'm not sure it was. I might have just not had the conviction. But I've been previously having an entry here of like a third of my desired total, and then I've been letting it run. And then if it breaks through another resistance, I've been adding as I go until I get to a full position. My new strategy, because I've got in trouble with that, and I don't think that suits my mentality very well. My new strategy is just to enter a full position at the first entry, which will be 5% of my total portfolio. So I have a maximum of 20 positions. I didn't do that in this case. So that would be around a £5,000 entry at the moment for me with the public portfolio. This I only did 2,500, so a 2.5% entry. I'm not 100% sure why. I think it's just lack of conviction, to be honest. It wasn't I think going through my head it wasn't the longest sideways action. It's just a stock I've been looking to get into for a while. If it had been going sideways for kind of a good 6 months or so, it would have been a much stronger breakout, and I would have had more conviction to go in with the full size. So I just talked myself out of the full position there. We'll see if that was a good decision or not. But from now on, I'm going to force myself to do full positions each time, or as near to as I can, because some stocks are obviously very high share prices, so it's hard to get close, like spot on with the percentage. Right, we've been on Arista Networks for a long time. Let's move on. Lantheus Holdings. So there's quite a few new stocks on my watch list because of my new checklist system, which prioritizes momentum, like recent earnings and projected earnings growth, far more than anything else. So there's a lot of new stocks on there. And the idea behind it is to get the stocks that are either just about to move into or already in really big, strong uptrends, and I jump aboard that train and ride the momentum. So this is one it's a US healthcare stock, and I haven't got the info in front of me, so I'm going to butcher this probably, but they effectively make and this is probably the wrong word, but like the dyes that get injected into you when you're about to go for a scan, so that when you're doing like an MRI scan or a CT scan or something, that they can scan your body better, basically. I completely butchered that, but they do those things that enable you, that react with the scanner so that they can pick up things inside your body. Completely butchered that. Quite an interesting company though. I've not done a deep dive research on it, but once it came onto my watch list, I just read through for about an hour and kind of got a gist of what they're doing. But that's kind of what they do. Anyway, been kind of sideways for quite a while. It broke above its 150 here, shot up, and I put in this line here because there's prior high here, waited for it to break through. It broke through on this day. This is one that did not have the volume. So it had volume at the start of the day, like I said, at volume spike, but then it didn't carry on for the rest of the day. And it did end up just about getting above average volume, but it didn't kind of blow away with it. So I was a bit cautious on this one. Quite a tight stop on this one, just at the top of this gap, because if I let it fall through there, it's probably going to come all the way down. But so far it's been performing quite nicely. Had a little bit of a pullback and it's continued higher from then on, so we'll see. And this was a full position, 5% of the portfolio in. If this does work and it does start to run, I would expect it to run up to these highs where this prior high was here, which would be 20% from where it is, so about a 25% total move. But I will just continue running it in the same way I do. I'll raise my stop on the 150 as it bounces up, and we'll just wait and see. But so far, so good on that one. Next up, NAPCO Security Technologies. Come on, load. There we go. So a lot of these are recent entries onto the watch list. So this one, again, bouncing along, sideways action, textbook, broke through, decent volume, just shy of double the volume. I was actually watching it because it had been touching it every day in the week leading up to it. So I was checking this one quite regularly. It broke through. I actually got it kind of near the high of the day because it shot up at the start of the day. And I entered just in case it kind of... I don't like to wait to see if there's a pullback, because quite often, if they're breaking through with a decent amount of momentum, they just carry on up for the day. So I think it's just better to get in as soon as you can. Well, for me, I think that's the best option. So I got in. It was quite near the start of the day. It did pull back a bit, but it's just moved up nicely since. It's had a little bit of a pullback, which is completely expected. This might even come all the way back down to test this prior resistance, which is now support, and then keep moving up. So one of the new rules is, if it's a stock, let's go back to, is this a good example? Almost. So if it's a stock that's in an uptrend, so there's a bit of a blip here, but I'm counting this because this was very brief and came straight back up. I'm counting this as a continuous uptrend. So if it's currently in an uptrend, I will play it as a trade, and I will go for a set percentage, which normally is going to be 25%. So from here, my entry, I'm just targeting a 25% move, and I will sell if it hits there. Just take the 25%. If, on the other hand, I'll just draw it, the stock has been going like this in a downtrend, it's gone sideways for a bit, and then has broken out. So there would have been this sideways action, and it's broken out here, and we would enter here. So it's coming out of a downward trend and turning into an uptrend. Then we would enter for a longer term investment, and I wouldn't have a set like profit taking point. I would just follow the 150 day moving average and use that to set my stops, and I would just continue holding it until we got stopped out. And that would allow me to get the really big moves like we have in Meta, where we've been following it right from the start of the new uptrend, and we've been moving the stop loss along the 150 day all the way up, and it's allowed us to make those massive gains. So my strategy now allows me to get these big 100, 200+% moves, but also stocks that we missed that on, that are already in really strong uptrends, it allows us to get in and still get some profits on those kind of stocks, but not give us too much risk. We kind of get in, we get the next leg up, we take some profits, and we get out. So it just allows me to do a bit of kind of the best of both worlds kind of thing. So yeah, we're in NAPCO Security Technologies, and so far, again, that one is going well, because we're quite precise on entries now. There's a lot of setups it has to have. As I say, I'm going to do the dedicated video, but I will quickly explain. It has to have an upwardly moving 150-day moving average, the RSI, so the Mansfield Relative Strength Indicator, which is the stock's relative strength against all the other stocks in the index, has to be positive. It doesn't have to be positive, actually. It preferably is positive, but if it is negative, it has to be sloping upwards. So it can't be negative and sloping downwards. It must have volume, but obviously we can't tell that 100% until the end of the day. But ideally it will have volume. And it mustn't have negative forward earning projections. So for example, if a stock had $20 earnings per share one quarter, if the projection for the next quarter was $15 EPS, so less, and I'm doing it year over year actually. So let's say in you had Q3 earnings. The projection for Q4 was $20, but the prior Q4 was $25. It's less. So you know what I mean anyway. It's got to have growing EPS for it to be allowed to be purchased. And there's a couple of more things, but I'll get onto that in the video. So I realised I hadn't shown my earnings snapshots for the previous two ones. So Lantheus and NAPCO Security. So these are the earnings snapshots, as you can see. Accelerating EPS for Lantheus Holdings and reasonable forward growth projections. And this is my new checklist system, which I'll get onto in the video. And NAPCO Security, again, accelerating revenue, decelerating EPS, but 38% growth, so pretty decent, and decent forward guidance as well. And moving on, so my next entry was Nvidia. So I already had a position in Nvidia, so this was a top-up. But just Nvidia is it's a different animal, isn't it? It's 262% revenue growth for the quarter, 629% earnings per share growth. And this is diluted, like basic, not adjusted. Just stunning numbers. And that's a deceleration. It was 1,200% last year in Q3. It's just stunning numbers. On my new checklist system, which again is more based on momentum and growth, it scores a perfect 50, and it's the only stock I found screening hundreds and hundreds and hundreds of stocks that's actually scored a perfect 50. So that one, let's pull up my entry. So I was watching this very closely because I had an initial entry here back in January of this year when it broke out of this previous sideways base. It's gone up and it's been going sideways here for a while, so I've had a close eye on it to check that it didn't fall down through or stop. Earnings here, it was already right at the top here, so I had a very close eye on this earnings to make sure that it was decent earnings. It was, and I jumped on as basically within the first half an hour of the open, got in a reasonably good level near the bottom for the day. And again, I had a very small position, annoyingly, down here. I think I only bought in for kind of like 1,800 pounds, which was like a 1.5% position. So here we added we basically brought it up to my entry cost to around a 4.5% position, but it's higher than 5% with the growth. So we added another 3 shares here. And this has performed really well. It gapped up here and then it gapped up 2 days later, which is just super, super strong. It's been taking a little bit of a breather here, but I expect it to continue making its way up. It's going to obviously pull back and do checks, but it is decelerating in earnings, so that was the only thing I was looking at that was a bit concerning. It's funny, isn't it, when you say it's concerning that they're only making 107% revenue growth and 127% earnings per share growth, but it has been slowly decelerating, and it's quite a big drop off from where it was. But there's nothing to say that they won't smash these out the park, because that's what they continually do. So we'll see. I've got quite a tight stop on it at the moment, just because I don't want to give back these profits. But if this starts moving normally again, well, it has been moving on, but if this continues in a strong uptrend, I'll revert back to putting it on the 150. But because we're in this sideways action, I pulled the stop up. So Nvidia performing very well. I think a lot of people got in on Nvidia at this point, people that have been watching it for a while looking for an entry. I know a couple of people on X, on Twitter, commented to me when I posted about it that they're going to get in as well. So hopefully you did. Because so far it's been quite a good entry. And then finally, the final purchase of May, so quite a few purchases actually, a lot of stock setting up, is another one I've been following for a very long time, and that is Deckers Outdoor. And I was just waiting for an entry. So in this period here, when I was still more kind of value investing, I would have been waiting for kind of a really big pullback, which when a stock's performing really strongly, like Deckers Outdoor, Nvidia and stuff, it's not going to happen. So we continued waiting, and now I've got now I've got my momentum strategy. In this situation where it's been going sideways for a while, I can enter when it breaks through resistance. Earnings came out here, so the morning after, because they came out after hours. I got straight in when it broke through with how much volume? Yeah, double average volume. So the earnings for Deckers are here. Accelerating revenue, very slightly decelerating EPS, but still 43% year over year. And this is actually a trend that I'm seeing. So I am a little cautious for the US markets. I'm just keeping an eye on it because a lot of earnings are actually showing decelerating earnings growth. Still growth, so it's still 25% year over year growth expected for EPS, but declining growth numbers. So it has been kind of growing 24, 38, 45, 79, and in the last few quarters, 44, 43, 25, it's declining. So I'm just keeping an eye on that because I'm noticing a huge amount of the stocks that I'm following are declining. So I don't know what that means, whether that means that the US economy is actually slowing and there is going to be a bit of a bear market or something coming up. I've got no idea, but it's something I'm keeping an eye on because a lot of the stocks, if we go through declining, all of these 5 are declining. So they're not negative, they're not growing, they're not red, but they are declining. So it's something I'm keeping an eye on. But anyway, we got in here. I was very happy to get in here. This was a full 5% position. No, it wasn't actually. Sorry, I lie. It was a 4% position. And this was just lack of conviction. Again, even when I set my rules. So around this time, it was only a week ago or so, there was just lots of negativity in the media around the US economy and things going on, and I got scared. So I just took a slightly lower position. So I need to stop doing that. I think I just need to stop listening to the media and stuff in general, really, or listen to it, but just not use it, not have it influence my trading at all. Just stick to my strategy. But it's still a 4% position, just slightly less than it would have been. And actually, another thing that was going through my mind was because it had this huge gap up. I did actually say to myself when I entered for this 4% position, if it pulled back to here, I'd actually top up that final percent and just get it a bit lower because it did do a big gap up, which kind of gave me a bit of hesitancy as well, just because it had jumped so much in the day already. But it's continued up. Very powerful stock. So they are a shoe brand, for those who don't know, that own the Hoka brand and the UGG brand. And I found these just because for those that don't know, I'm a runner. I do a lot of running. I do ultra marathons and things, a lot of trail running. And my go-to shoes are Hoka. And I've been wearing them for years. They're a brand I really like. And it was only kind of a year ago I actually thought, are these actually like a public company? And that's when I actually found out about Deckers Outdoor, just by searching who owns Hoka. And it was back in this kind of area when it was already in a very strong uptrend. And because I love the brand so much, and because they're growing the brands so well and they're growing their financials so well, it's been a stock I've really, really wanted to get into. But I've been patient and I've waited for a decent entry, which was here. So I'm very happy to own this stock now. And then finally, sales. Only been one sale, and it has been it's not going to be there. It has been a problem stock for a long time for me, and that is Impact's Asset Management. So I've owned this for a long time. And I entered this still with the checklist system, so it passed the checklist, my old one, but I was entering on valuation terms. So I entered here. So we'll just look how bad these entries are. The whole time it was in a downtrend, so bad entry. But at least I waited for a bit of an uptrend here, and I probably thought that was a higher high, and it was back in an uptrend. So I entered there, and then it declined further, and I entered there, and it started going up for a bit, and then it went into another downtrend, and I bought again when it was still technically in a downtrend. So just just this is my old mindset of buying because I thought the company was good, the stock was good value, which what it is. I'm not knocking that for other people, because that is a proven a strategy that if you have a very long-term mindset and you're willing to take those short to mid-term paper losses on the chin, it does work. But for me and my mindset now, I don't like looking at my portfolio and seeing stocks at 30, 40, 50% losses on paper and having to wait years for them to come back into profit. So now well, as you've seen, and as you'll know if you've been watching the videos for a few months, I now buy on momentum. But this was part of the portfolio because it passed the checklist. It was all done on my checklist system. And I still think it is a decent stock. If I was a value investor, I would happily be buying at these levels. But at this stage, I was down kind of 40% on the stock. It came back up and then it's deteriorated again. And I've been slowly raising my stop so that I wasn't going to get back down to 40%. When it pushed back up here, I pulled the stop really tight up here just because I didn't want to come back down to this level. It released earnings, which weren't great in here. It's underperforming against its peers, such as like Polar Capital and Lion Trust Asset Management and things. It's growing assets under management, but only via market movements. In terms of net, the money people are putting into it that's gone down. So it's not even outperforming its benchmarks in a lot of cases. So it's poor results. It dropped heavily on the day. It dropped below the stop. I just got out for a 30.5% loss, quite a big loss, minus £1,300. But I'm very glad to be out of it. And I know that this will most likely be the dead bottom now and it will continue up, but I don't care. I stuck to my rules. I did not want to risk this coming down further, being back to a 40 plus and even coming through here and just being in no man's land. It's a stock that didn't fit with my current strategy. The entry was not what my strategy is now. It doesn't pass my new checklist. So I'm out, and even though I took a reasonable loss, I'm happy with that. As I said earlier, looking at my portfolio now where there's nothing with more than a 10% loss just makes me feel a lot calmer, more confident in my strategy. So overall, even though it's a big loss, I'm actually very happy that it's gone. It's been a problem stock for a while, and it's the only one that I've really been worrying about for the past few months. So that one is gone. What do I normally do at this stage? I can't remember. I think that might be it. So yes, the other thing to mention is for those that haven't seen, I've started doing weekly trading journals. Let's pull up the site actually. So I've started doing weekly trading journals. This is my website. It's not very good. I just made it myself. But I've started posting weekly trading journals because it's something I used to do, kind of have a trading journal, not very religiously, but I did find it helped, just noting down what I was doing each day and my thoughts when I was entering and exiting trades and things. So I've started doing one. It's quite basic and it's just me. I'm not a professional or anything. So whether this is of any interest to you is I don't know. But I'm going to be posting these. It's more for myself. It's just so I can look back on. It's just I've put it online so that it's there for people to see if you want. And I just run through what I've done each day. If there's any earnings results, quick comment. If I've made any trades. So last week, Impacts Asset Management was on there. I didn't actually enter anything last week, but the week before there was a few entries. And then I do a weekly wrap up, kind of what's happening with the markets and themes and subsectors, thoughts on strategy, and then looking ahead to next week, like what stocks I think are setting up the best, so ones I really want to keep an eye on, upcoming earnings and any news that might be affecting things, and just like my game plan, my thoughts for the week ahead. So if that's of any interest to anyone, I post them onto Twitter, like a link when I post them, or this is my website. If you want to bookmark the website, they'll be coming up kind of every week, which is just philperryinvestor.co.uk. So there we go. A month in the books. As always, let me know how you guys get on. Normally, the theme is that everyone posts in the comments that they've done better than me, which is absolutely fine. I am very glad that people are doing really well. There's a lot of good traders out there, it seems like, and hopefully one day I can kind of get up and join you with the figures you're putting in. But yeah, very happy with this month. As I say, I've forgotten what it is now. 4 point something. 4.57% for the month. So very happy with that. Confident going into June. Strategy's really well set up. So thanks for watching. I always forget to say it at the start of the video, so I need to remind myself to say it at the start of the video. But if you are still watching, please drop a like and consider subscribing if you're not already. It does help with like all the YouTube algorithms and all of that kind of stuff. But yeah, hope you had a good May and hope you have a great month of investing and just life in general in June. So see you later.